Everybody, welcome to Talking Real Estate with Champions Real Estate Team at Berkshire Hathaway Home Services Ambassador Real Estate Company. My name is Mark Wehner II, team leader here at Champions Real Estate Team. So we jump on here every Wednesday and kind of give you a rundown of the market, what we're seeing on the ground level and what's going on. And also we have Russ Williams with Williams Mortgage going to kind of chat with us about the mortgage rates and kind of what he's seeing. And the Feds are meeting today, I believe, and we'll kind of touch on what that kind of means from an interest rate standpoint. But hope everyone has out there staying warm. But let's jump right into kind of the numbers for those that like the number aspect of it. So over this last week, we've had 307 new listings go live for your viewing pleasure. We've had 276 new contracts written. So homes that went pending. So basically those homes that came on the market pretty much went right back off the market. So 367 new homeowners this last week. So we'll kind of touch on the 30,000 foot view of what's going on in the marketplace here. So let's jump into the big picture. So what we're talking about, the big picture, we have 1,172 homes in the Omaha and Lincoln MLS. So that's a big wide swatch of kind of eastern Nebraska there. So we don't really have as much inventory as we would like. We are kind of at historic lows. Breaking that down further in the Omaha metro area, we have 586 total homes for you to go take a look at in the Douglas-Sarpy County area. Breaking it down a little further, existing homes, we are under 200 homes for you to look at basically on all price points in that Douglas-Sarpy County area. New construction, we're down a little bit to 389. 1 month supply of inventory, average sold price kind of hover on those 290 price point. So what we're talking about, what we're seeing in that marketplace is, we have a huge lack of inventory out there. As you see, we're under 200 homes you look at as of about 10:30 this morning. In the Omaha metro area, what is that? 600, 700,000, 750,000 people, and we have less than 200 houses. So what we're seeing is obviously, the homes that go on the market are coming off the market real quick. As agents, what we're having to do is basically kind of get out there and pound the pavement. And, if our clients want a particular neighborhood, happy to go knock on doors, even though it's a little cold outside. But, with people that have Ring doorbells or the cameras and stuff, we can ring the doorbell, and it's a 30-second infomercial where we can say, hey, we have a buyer that wants to be in your subdivision. If you're interested in selling, give us a holler. And sometimes that's kind of what you have to do. And, with the buyer's flexibility, they may not have to sell, they're renting a house. That'll give that other seller, essentially now that becomes a buyer, an opportunity to go find something and have them a little bit of a time frame. And prices, as we see, are going, have been increasing over this, as we're coming into the, full-fledged swing of going into the, weather's not spring-like, but we're kind of seeing that big push of buyers that are out there, homes that are on the market, seeing some multiple offers. Obviously, buyers know that, what we've talked on in multiple weeks is that from a seller, yes, we have low inventory, but buyers still want the houses in good condition, want updated, because in their mind, if they're paying a premium for a house, they don't really want to have to do too much to it. So they kind of want a turnkey operation. And then obviously, if you're not having the turnkey side of it, we'll price it accordingly from a seller's perspective. And you still may get multiple offers because there are some people that they're willing to do that little bit of sweat equity if they need to do carpet, paint, some of those minor things, that's pretty easy for somebody to do. And they're maybe willing to get into that house. Sorry, I got my crowd behind me here. I got the daddy daycare with a 1-year-old. So, but she's excited about the market, right? So, hi. You saying hi? Okay. So, but yeah. So, the market is still very strong. I think there's going to be kind of more obviously listings coming on the market. We're seeing some coming soons. No show listings in the MLS, which is a lot of times where people are getting their houses ready to get on the market, whether they're doing the painting, they're doing the carpet, because sometimes that can drive up a little bit of prices. So that little bit of investment in your property or some of that deferred maintenance that you've been pushing off until all of a sudden, hey, Mark, we want to sell our house. What do we need to do? It's a seller's market. We can get it out there. Well, some of those buyers don't necessarily want to do all that deferred maintenance. And if you do it, potentially may net you a little bit more on the bottom dollar for you in that aspect. And that's what we're happy to do, is go out, meet with you, walk through your house, give you a game plan. Does it make sense to do this? Does it not make sense? We're going to be flat out honest. We're not going to want to spend your money. That's really not going to be an advantage for you to net more. So we're just going to be flat out honest with you and say, no, you don't need to do that. Yes, you could possibly do this, and your return on your investment in that aspect of how to gain that for you. So, but as we talk on every week, you got to have a game plan. And that game plan, first thing when I'm meeting with buyers is have you talk to a lender, and that's Russ Williams, chatting with him on what you need to do to get your game plan together. Whether you need to get credit in line, what do you need for down payments? What are the options? As we're seeing, we'll kind of touch on now is, what the rates have been doing. And you just put yourself on mute there, Russ. But so I guess how are you seeing the rate side of it on your end? I'll put myself on mute so you don't have background noise.
Mark, right now is a little bit like 13 seconds left in the divisional playoff game involving the Chiefs. It's going to get real exciting and starting in about an hour and a half as the Fed makes their announcement on what their monetary policy is going to be, at least for probably the next 6 weeks. But as far as mortgage rates go, right now we are sitting at interest rates that we haven't seen since the start of the pandemic back in March of 2020. 30-year fixed rate mortgages without paying any points are somewhere on the upside of 3.5%, which is still historically phenomenal rate, still a great time to finance a home. But the reason why we're seeing interest rates rise is because of what the Fed is trying to decide what to do and what they'll be announcing here in about an hour and a half. And let me explain that. The Fed, as everybody knows, controls some short-term interest rates. They don't directly control mortgage rates. What the Fed controls is short-term mortgage rates that would affect things like auto loans and credit cards and student loans and even home equity loans. Your long-term mortgages are driven by the bond market. And in the current inflationary environment, when the Fed increases those short-term rates, that acts as a brake on the economy, thereby starting to curb inflation, and that brings the yield on bonds down when they do that. And so in theory, we could very well see better rates after the Fed has raised short-term rates. Now, we don't know if they're going to raise rates today in an hour and a half, hour and 15 minutes, or whether they might wait until later this year, possibly the next meeting in mid-March. They have another challenge, though, that the Fed is dealing with, and that is the fact that over the last few years, they've really built up the balance sheet of bonds that the Fed owns. The Fed, have been buying lots of treasuries and also lots of mortgage bonds to the tune of about 8.3 trillion in bonds that they own. They've telegraphed that they want to start liquidating their balance sheet of bonds, and if they were to decide that they don't want the stock market to get too rattled. Keep in mind, we're off 10% off of highs in the stock market. If they don't want the stock market to get too rattled, they might be rather tepid with their rate increases and more aggressively start to liquidate their bonds. And if they do that, that additional supply of bonds on the market would have the effect of pushing bond prices lower and yields higher, which means possibly higher mortgage rates as we move through the first half of the year. So we're waiting to see what the Fed's actions are. They're kind of walking a tightrope, trying to keep the stock market happy while also trying to get the inflationary pressures under control. But we'll know, we hope that we'll know what their game plan is, which is very important within the next hour.
Yeah, and I kind of think, like you said, like with those interest rates potentially going up, your buying power is going to go down. And I was talking to one of my clients this last week or so, that the prices that we're looking at now when you're writing contracts and we're getting, as multiple offers are coming into play, let's take an example, a house of 250 that's listed right now today, and it gets multiple offers, it drives up to 260, 270-ish, depending on, the condition and all that kind of fun stuff. Well, when we go to list a house, let's say in May, we're going to probably in the same neighborhood, we're going to probably use that comparable that was listed at 250, sold for 265, 270. Now we're going to list that house potentially 265, because that's what the market's bearing potentially. And then that house you could get in now at 265 at 3.75 interest rate, maybe March or May in the summer starts at 270, may sell for 280 at 4% potentially, so your buying power, could be very well affected, even though some of these prices as buyers, it's kind of, very volatile out there, I guess, if you want to call it that. And so it's just getting your foot in the door, on kind of what some of these prices are doing, because we're not seeing a huge supply of new homes coming on the market in those price points. So you got all these buyers that are out there kind of just trying to find a house that fits their needs and their price point. Like you said, as interest rates go up, your buying power goes down. And then as those prices keep rising, the old adage, well, I'll wait till it slows down or wait till it calms down. we've talked about it and, over this last year of just the sheer numbers of home buyers that are going to be entering the market every single year in the millennial generation, as those average home buyers, around that 33, 34 years old, just the demographics of that buyer pool increasing, and we're not keeping up with the demand. So, I think it's just a sheer numbers thing that if you're thinking about buying a house and you're going, I'm going to wait till the spring, summer market when there's more houses on the market. Honestly, I would start looking now if you have the means and the game plan in place, to do that. And like I said earlier, if you have a specific neighborhood area, we can tap into our spheres and tap into the neighborhoods, obviously, and go start knocking on doors and seeing, playing matchmaker, and that's what we're here for, is to help you guys find your house in that manner. So, but as always, the old adage is, don't wait to buy real estate and wait, so even in the investment aspect of it, finding a house out there, as the money's cheap with the interest rates being low, maybe now's a great time to pull some of that equity out of maybe your primary residence to buy an investment property, in that manner, and have that renter pay that equity back to you in the form of the rent, and that cash flow aspect of it. So it's just a whole nother ball game, to potentially dip into, especially with how volatile that the stock market's been and the crypto and all that kind of fun stuff. Just what vehicle, do you want to have in the garage, and how many of them do you want to have that you're going to be, utilizing where you want to go, and obviously real estate is another investment vehicle, just as stocks, crypto, bonds, mutual funds, all that kind of fun stuff. So, but we're happy to chat with you anytime. So Mark Wehner at Jamie's Real Estate Team at Berkshire Hathaway Home Services Ambassador. Reach out to me on any of the social media platforms we're on, 402-672-7670. If you have any mortgage questions, give Russ Williams a call at Williams Mortgage, 402-290-8936. Nice thing about Russ is being a mortgage broker. He can shop and look at all the different rates with multiple companies, mortgage companies that are out there, and find the best fit for you from a buying perspective. So, or even a real estate investment standpoint. I know he was talking that one of the packages or vehicles he has, you can get a 15% down investment loan. If you want to get into the investment game, you might not cash flow as much because you don't have as much down. Your payment's going to be a little bit higher, but you're at least going to start building some of that equity that you can maybe use to jumpstart that investment portfolio. So, Russ, you have anything else you wanted to add on or touch on, or a nerve I hit, or?
No, I think you covered it very well. With so few sellers out there, this is a great time to get your home on the market. So give Mark's team a call. Buyers are waiting.
Yep, absolutely. So appreciate everyone jumping on with us today, and we will catch you next week. As always, if you have questions or anything, give me a holler. Give Russ a holler if you have any mortgage questions, and we will be happy to help you.